how a couple of Reddit folks took down hedge funds with the GameStop stock. Now, before we get started, make sure you like this video, share this video, subscribe, and click that bell icon so every time I bring out a new video, you'll be notified right away. I talk about business opportunity reviews, news, and actually train people on how to build a business online, all on my channel. So that's why you should like, share, and subscribe. Now, what happened to GameStop stock? This is an amazing article I found, pretty much sums it all up. And, you know, this has been the first time I ever seen the little guy or David take on Goliath and actually win or winning at this point. So bets against GameStop stock followed by a campaign to juice the video game chain shares sent its stock price soaring before it tumbled Thursday when trading app RobinHood banned purchases. The phenomenon involves two trends championed by individual investors in recent months: options trading and momentum investing that have collided with the sometimes controversial strategy of short selling. This combination has led to high scores for some playing the market this week. Here's what fed the dizzying rise and stomach-churning fall in GameStop stock price. So this is how it all started. How does short selling work? So the fund, the hedge funds, want to do the short selling, and the other guys, the Reddit guys, said nope, not this time. So what happened is, so if you don't know what short selling is, it's basically investors sell borrowed shares of a stock with the hope of buying the shares back later at a lower price. It is essentially the opposite of traditional investing, aimed at profiting from a stock's rise. The GameStop story starts with short sellers who lost confidence in the company future as the pandemic challenged companies without strong digital strategies. With short selling, investors make money if the price of a company's stock falls. If the price falls or rises, investors need to cover their positions by buying the stock back up at a higher price. The losses can be a lot. Trust me, it's a lot this time. Here's an example. An investor borrows 100 shares from a broker at $50 per share, plus a small fee for the transaction, expecting the company's stock to go down. So they put 50 bucks in. Before the stock falls, investor or short seller sells the borrowed shares. That precedes $5,000 of credit to their account. So if the price falls to $25, right, it will cost just 2,500 bucks to buy all those 100 shares. This way, the investor pockets $2,500. Now, if it goes the other way around, it goes up by 25 over the 50 bucks. This time, when they buy back the stock, it'll cost them $7,500, giving the investor a $2,500 loss. So what happened with GameStop stocks? Individual investors in Wall Street Bets Reddit community began driving up the price GameStop on January 11th when the changes to the company board of directors suggested it might be embracing a digital strategy. The rising share price put pressure on short sellers and their bets for declines in GameStop shares. Soon, they were forced to become buyers of the shares they had sold short, pushing share prices even higher. So they were betting against GameStop, the hedge fund, billionaire hedge funds, the institutional, I guess, traders, investors. They were betting against GameStop, but the Reddit folks said, no, not this time. You're not manipulating anything this time, is what they said. So as you can see, September 21st is when it started. Chewy.com founder Ryan Cohen reportedly buys GameStop shares over here at roughly 10 bucks. And then January 11th, GameStop agrees to 3 new directors. It kind of went up. And then January 26th, stock soars 92%, closes at nearly 148. And then on January 27th, stock closes just below 350. That is insane. I've never seen anything like that in my lifetime, at least. So individual investors added fuel to the fire, sparking this week's exponential stock price increase by using call options to bet the price would rise. So how do options work? Call options lets investors buy shares for a set price in the future. The cost of the option is a fraction of the stock's current price. If the stock price rises enough, the value of the option rises, and the investor can sell for a quick profit. Put options are the opposite, a right to sell a stock at a set time. The investor purchases either kind of option from a market maker, an electronic trading company, or individual that often purchases the same stock as a hedge against a rise in stock price. In the case of GameStop, market makers' hedges likely helped fuel the stock's surge. So how did it all go down? This is a great timeline on how this whole thing went down since September 8th, 2019. By the way, I have this article in the description box below so you can take a look at it. So September 8th, 2019, someone on Wall Street Bets is already buying GameStop stock. December 31st, 2019, GameStop stock, GME, closes at $6.08. March 30th, 2020, GameStop says it will close more than 320 stores in 2020. GME closes at $3.65. You can see how low that was not that long ago. August 31st, 2020, Ryan Cohen, I think that's how you say his last name, a co-founder of Chewy.com, buys 9% stake on GameStop. GME closes at $6.59, or GameStop stock. September 8th, 2020, denizens of Wall Street Bets had discovered short positions and prepared to wield their, quote, choice of weapon, $GME, quote. GameStop, on September 10th, 2020, GameStop revises estimate, says 450 to 500 stores will close. So the stock closes at $6.23. September 21st, 2020, Cohen says he talked with GameStop management to increase their online products, offer more merchandise, and improve shipping time to customers. Stock went up to $8.75. September 22nd, GME surges on reports that Ryan Cohen had taken position. And then December 8, 2020, the company says it will close more than 1,000 stores by March 2021. And the stock closes at $16.94. September 17, 2020, Cohen buys more shares of GameStop for a total of $9 million. And the stock closes at $14.83. January 11, 2021, we're getting close now. Cohen and two colleagues joined GameStop board of directors. So the stock closes at $19.94. January 12th, 2021, members of Wall Street Bets, a group of individual investors formed on Reddit, are buying up GameStop stock. GME, or stock, closes at $19.95. That was literally like not even that long ago from today. Today's the 29th of January 2021. So on the 21st, with GameStop trading, GameStop trading, not GameStop, at $40, Andrew Left, editor at Citron Research, tells, I'm not sure who, Benzenga's Zinger Nation Power Hour, that he expects GameStop stock will fall to $20 in the near future. He says GameStop's business is in terminal decline. So the stock drops to, actually no, it goes up to $43. But they're betting on that it will go to 20. So January 22nd, falling on online backlash, Citron says it will stop commenting on GameStop stock and characterizes internet commenters as angry mob, which the stock closed at $65.01. And then Elon Musk on January 25th, he does this a lot. He tweets game stonk, and the stock just goes to $76.79. He's done this in the past before. January 26th, 2021. I'm not sure how to pronounce his name. Kamath, CEO of Social Capital, goes long on call options. We bought a February 115 calls on the GameStop stock this morning. Citradel and Point72 infused Melvin with close to $3 billion to shore it up. Gate Plotkin defends against rumors of bankruptcy filing. Melvin Capital, a hedge fund that is short selling GameStop, closes its position on the company, and $147.98 is what the stock went up to. January 27th, Andrew Left of Citron Research explains that they are closing their position, covered the majority of the short in $90 at a loss of 100%. January 27th, 2021, on the same day, NASDAQ momentarily halts trading on GameStop, AMC Entertainment, and fashion retailer Express after trading reaches a level of extreme volatility. TD Ameritrade restricts trading on GameStop. Interesting. So it looks like they're trying to protect the hedge fund people. I'm sure it wouldn't happen if it was the other way around. January 27th, around 1 p.m., TD Ameritrade sends the statement to USA Today. In the interest of mitigating risk of our company, mitigating risk for our company and clients, we have put in place several restrictions on some transactions in the GameStop stock, AMC, and other securities, said the company. We made these decisions out of the abundance of caution amid unprecedented market conditions and other factors. January 27, 2021, Kameth closes the position, defends individual investors' rights to sway market like pros. On January 27th, again, 5 p.m., SEC issued statement. We are aware of and actively monitoring the ongoing market volatility in the options and equities markets, and consistent with our mission to protect investors and maintain fair, orderly, efficient markets. We are working with our fellow regulators to assess the situation and review the activities of regulated entities, financial and other market participants. Stock closes at $347.51. Social platform on January 27th bans Wall Street Bet server. Wall Street Bet server goes private on the same day. Then it goes back to public again. January 28th, around 10 a.m., RobinHood say that they are restricting transactions for certain securities to position closing only, including AMC and GameStop. Stock. Wow, that's a mouthful. January 28th, again, Webull restricts activity on the same stocks. January 28th, again, on Twitter, Ted Cruz, Texas, agrees with the statement by Rep. Alexandria or AOC that Robinhood's restrictions were unacceptable. On January 28th, class action suit against Robinhood filed. Same day again, Discord no longer banning Wall Street Bets, says they are helping them with their new server. And then January 28th, Webull says that the stocks, the GME, AMC, and costs are no longer restricted. At the end of trading on January 28th, Wall Street Bets poster claimed to still hold almost $33 million. This is insane. And there's other stocks that went up too. Not at the same level, but I mean, like BlackBerry here went up to $58 from no, that's not BlackBerry, that was costs. 10 to 50. BlackBerry jumped from 18 to 25. AMC went from $4.96 to $19, almost 20 bucks. So there you have it. This is the first time I ever seen the little guy or retail investors taking on the hedge funders, the billionaires. Now there is I know a lot of people are like, yeah, the retail investors are winning. Now the problem with the other side, the hedge fund people, they have clients that are just regular people like you and I, and they're gonna lose a lot. So there's always, two sides of the story. Does that mean that hedge funds can do whatever they want? Absolutely not. I think they need to follow the rules, right? And they manipulate, and they have been for many, many years. It's just now everyone's more aware of this, and they can do the same. basically the little guy, the subreddits, there's probably, I think there's around 10 million accounts. And at that rate, they will always beat those hedge funds if they wanted to. So maybe they should stop manipulating the stock market by saying, oh, GameStop is not going anywhere, it's going to crash. And, you know, go on live TV to sell the stock and, you know, bring down the price. They are manipulating it on purpose to make money. And this time, the Reddit guys just said, you know what? Nope, we're not going to have that. We are going to do our own stuff. We're going to follow the rules of what you guys are doing. And they did. And this time they're winning. I mean, this is insane. $347. Today, it's actually, that was yesterday. I think it's still trading higher. I think in the mid 300s as of today. And honestly, if it gets to like $1,000, that's going to be the hedge funds are going to lose. The banks are going to lose more than the 2008 financial crisis when they lost I think up to $50 billion. This is going to be more than that. If GameStop stock goes to $1,000, it's going to be pretty insane. Could be a finance, the whole structure can collapse. So that is a possibility in this. And what's going to happen? I'm not sure. Honestly, I'm not sure. We just have to wait and see. So anyway, that is it for this video. I know it was a little long, but I just think it was very interesting. Make sure you like this video, share this video, subscribe, click that bell icon so every time I bring a new video, you'll be notified right away. And if you want to learn how to build a business online the right way, visit my website, themillionairejob.com. Click the link in the description. Put your best email address in and we'll show you how to do that. Basically, what we teach people is how to promote affiliate offers. Affiliate offers pay anywhere between 50 to 80%. These are free to promote. So what we're going to do is help you set up the actual sales funnel. It's just a tool. We even have templates. It's pretty simple to do once you know what you're doing. We're going to teach you how to drive traffic to it and convert that traffic to sales, right? End of the day, we want to make commissions. And the beauty about this is you don't have to be there 24/7 for you to make sales. Your sales funnel does it for you 24/7. Once you're all dialed in, you're all set up, you know, you know what you're doing, which is what we teach. And you know, sky's the limit when it comes to income, because now instead of leveraging your time at your job where you're working anywhere between 8 to 10 hours a day and that's it, this is running while you're sleeping. So once you're set up, right, I'm not gonna say this is gonna happen overnight. Like once you're set up, once you're dialed in, you learned everything, you're actually taking action, you're dialed in, you could be waking up to money. That's the difference here. So anyway, that is themillionairejob.com. Click the link in the description and I'll see you on the other side. Take care, everybody.